what of rotation, right? So much of end of quarter and end of year is about reallocating and rotation and all these other things. And bottom line is, we can narrow the field down, but I don't believe there's a way just to really concretely say, hey, we're going to see rotation into healthcare, or we're going to see rotation into financials, without looking at sort of the reason why these might be candidates. Now, if y'all recall, I think on Tuesday's video, the free video, I talked about the two groups I was looking at for rotation. The first are the two symbols I'm looking at right now, XLF and XLV, financials and healthcare. And these were basically lagging to the XLK. Now, if I'm a futures trader, why do I care about that? Because the reason the NASDAQ moves is because we've got strength in XLK, XLC, XLY. The reason the S&P would participate is because of XLK. But if XLF, financials and healthcare, XLV, participate, now you've got not just the S&P firing on all cylinders. Now you get to see the Dow firing on all cylinders too. So the big difference, by the way, in the way the Dow moves as opposed to the S&P is tech. Tech is really, if you want to say what's the difference in the Dow and the S&P anymore, other than the obvious, right? That the S&P has 500 stocks in it and the Dow has 30. Really the difference is financials. Financials are the number one weighted sector in the Dow, therefore it's more sensitive to that. And XLK is still the number one weighted sector in the S&P, which means it tends to be more sympathetic to the NASDAQ. Right? Once we understand the construction of these, once we accept their high concentration weighted, things make a whole lot more sense. So there's two groups we were looking at. Either we start to see a rollover in tech, which we have not seen, right? The idea was, if we're seeing rotation, those parabolic, accelerated, outperforming sectors of the NAS, XLK, XLC, and XLY would see profit taking, and that would benefit possibly the more defensive, dividend yielding ETFs sectors in the market, meaning XLP, XLU, XLE, XLRE, which were sort of languishing at the bottom of the totem pole, if you will, of the sectors, right? You look from strength to weakness, you look from top to bottom, and those were at the bottom. Ultimately, without the XLK, XLC, XLY rolling over, that was our game plan. There's no reason to think defensively. And that's where XLF and XLV, as you can tell, shined. And I don't believe that to be an unrepeatable process. We'll do the same thing at the end of Q3. We'll do the same thing at the end of Q4. So this week's video, this week in the markets newsletter, these are the game plan that I use to understand this phenomena. And that's why it's been easier to, I think the last 2 days, I'm actually a little shocked that usually this day, I'm going to be straight up, this day is usually challenging. I feel like I have to break a sweat and get a few gray hairs to eke out some profits as we wind down the quarter. And we have a really nice TLT buy. Yields are dropping. Why? Risk appetite. And a little less expectation that we're going to see a second hike this year. Hike in July, sure. But it looks like it's a hold for the most part from here on out. Yields drop, TLT's up, ZB's up. Awesome, right? And that's the one position. And the other position, look, if we're seeing strength in tech and we're seeing strength across the board, Apple is a great way to sort of cast a line, right, into that lake where everything's biting. And there you go, long Apple. So, and we like the XLF as well, right? We purposely designed XLF as a way to take advantage of the Dow and the S&P, because remember, NASDAQ does not give a rip about this thing, right? But if we're going to see the indices play catch up, if we're going to see the harmony across these three major indices, XLF, and we designed this so that, yes, in part, we could make it a day trade and scale out, which we have, but we could also take it further into July with a later dated expiration, because it is such an inexpensive option. It's a very inexpensive option. How inexpensive? Well, this is the scalability, right? This is what I love about not thinking you have to go buy $15, $20, $30, $40, $50 options. Can you buy something like XLF for, say, 90 cents, right? Can you buy something like this for $1 and still have 3 weeks to expiration? Sure. So now a small account can buy, at $1 basically. Could you buy $500 worth of options? That's the budget. Sure. And could you then say, I'll risk 25%. That's $125. Very reasonable for a small account. Okay, well, I don't like to think in small, medium, large at all, right? I think in scalability. Now, XLF is very liquid. Another trader could say, Rog, I'm going to buy 40 of these things, right? I'm going to spend about $4,000, a little bit less, and I don't mind to risk $1,000. And it's all calibrated according to account size. So the scalability is very much reliant on the open interest, and that's where I love getting into. I don't like sub $1 options very often, but this one was sub $1, very liquid, 3 weeks to expiration, therefore super scalable, right? I don't like 40, 50 cent options, but if I can stick with about $1, 90 cents, $1.10, that's okay. That's okay. All right, so that's really what we focused on here. Falling yields. That's why ZB moved higher. Risk appetite. That's why Apple and XLF continue to move higher, and that's why we see strength in the Dow, the S&P, and the Nas. And this kind of harmony, right? When all three of the major averages are moving together, those are the kinds of environments that are much more fertile for follow-through. All right. So nice end to the quarter, and it looks like it's risk appetite, gang. It doesn't look like we're seeing a bunch of defensives really getting much play, and this bodes pretty darn bullishly for July. So we'll see what happens. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.